Okay, so it's going to be a trade recap for all the trades that were taken during the week, those that were successful and those that were not successful. Okay, so this is New Zealand dollar versus Canadian dollar. Okay, so this was called live. This was a trade with 3 pips stop loss. Okay, so it was during a Zoom session, so there was no setup, no drawing. Okay, we called it live. Okay, so I'll play a video, I'll fast forward it, and then I'll come back to explain what happened in the video. Okay. All right. So in here we have a low resistance liquidity. Okay. All right. So as you can see, that was the setup. Okay. Now I explain this way. Okay, so on the daily chart, right? On the daily chart, we had this down move. Okay, so we have a high, a lower low, a lower high, and lower low. Okay, and we are seeing a pullback in the form of compression. Okay, so with that, right, we saw that within this particular area, okay, we have a high, a low, a higher high, and a lower low. So we have a QM here. Okay, so this is the QM level. Opposite, you have a base, so we are using the base. Okay, so now, all right, what can we see again? You can see that we have a trend line, so we have a Quasimodo continuation. This is a QM, and then this line with a trend line. Okay, so we have clap here. Okay, so now when I go to a lower time frame, right, when I went to the 1 minute time frame, I had already seen a rejection. I think at that time we're looking for a rejection. Okay. All right, so you guys saw me marking this candle here on the 1 minute. This is what we have. Okay, so this is what I marked in this particular area. Okay, there was a break of market structure here. If you're following the structure, this is a high, a lower high, a higher low, and then higher high. So we broke it here. So this is here we have a major break of structure in this trend. Okay, so this major break of structure started from here. There was a minor break of structure. So you can see that within this zone, we have a high, a higher low, and a higher high. So broke structure here. Now, when we got that break of structure, the market didn't come back to test the primary point of interest. Okay, so this is also part of the liquidity. If you watch the high resistance and low resistance liquidity, the part 2. Okay, so now market couldn't come back to touch this level, which is a primary point of interest, and this one also as a primary point of interest. Okay, those were not mitigated, so it created some kind of unmitigated zone. Okay, so this pullback. Okay, so all these are primary point of interest. This pullback couldn't make it to the primary point of interest, therefore it became liquidity. Okay, so what I did was that, right, just calculating the number of pips from here to there, it was about 4 pips. Okay, to this high was about 3 pips. Okay, so 4 pips. Okay, so if this is 4 pips, so 4 pips can be a stop loss for me. It's okay for that, for as a stop loss. Okay, so then I can say that my entry will just be slightly above this, because if this is a low resistance liquidity, then to be taken. So my entry is slightly above it, and my stop loss is just above this particular one. Okay, so now the market came back in and then traded into above that low resistance liquidity, okay, into the primary point of interest, this one, okay, into that one, and then boom. But remember the target. So in the video, you saw me marking this level. So me marking an area here, an area somewhere, I think 2 hour. Okay. So you saw me marking this area. Okay, and the reason was that, okay, in this particular compression, okay, all demand zones have been touched, they've been mitigated, except this particular demand zone at the time we're doing the setup. So I knew that, yes, there's going to be resistance around this particular zone. That is why I marked it. So once this zone is broken, then market will trade below all this. Now the market is in between, is trapped in between 2 trend lines. Okay, this major one to push it to the downtrend, and this correction. Okay, so now if you break this, then it means that we are going up. If you break this, it means we are coming down. So that was it for New Zealand CAD. Okay, so this gave 1 to, I think, 4 pips for about 72 pips. From here up to here was 129 pips. Okay, 129 pips. So let's say 130 pips divided by 4. Okay, so that was a good ratio. All right, and then now after that we saw a pullback. Let's see. So this pullback, I was looking for trade here. My stop loss got hit. Okay, then I saw this a trade drive pattern. Okay, so this trade drive pattern, we have 1, 2, 3, 4, 5. Okay, so we have wave 1, wave 2, wave 3, wave 4, wave 5. And with this kind of trade drive pattern, it looks like what? A diagonal triangle, an ending diagonal triangle. And if you watch a trade drive video, you understand how to trade an ending diagonal. We are seeing that the impulse waves, okay, the previous impulse wave cannot be shorter than the next previous wave, impulse wave. So this is the impulse. So we have impulse 1. Okay, so if I measure this from wave 2 to 3, okay, wave 4 to 5 cannot be longer than this. So if I use this and put it here, you see, if I put it here like this, cannot be longer than this. So this means that when price hits this level and came down and was retesting, I can take a trade here and put my stop loss here, because this wave will never be longer than this. Okay, so with this, I targeted. Still, I was expecting it to break, but it didn't break. Okay, so now we'll wait and see for this week, see if price is going to retest and continue. All right, thank you. That was for Nzdcad.